Ladies and gentlemen, welcome back to the channel. Following today's volatility, especially in Tesla, I want to discuss what the next couple of weeks could look like for Tesla. Could we see upside in Tesla, or should we still be ultra preparing for the downside? I will share my perspective with you on just that in this video. But first, before we get into that, Tom Lee actually says the S&P could rise 23% from current levels into the end of the year. That would be the S&P at about 6,600 by the end of this year. And while I don't agree with a lot of what Tom Lee has said recently, I do agree that the markets are already pricing in a lot of bad things, right? There's a lot of people expecting a recession already. There's, a lot of people expecting high tariffs and very few deals to actually get done. And overall, an economy that continues to weaken with higher inflation. There's not a very strong bull case right now. And if there is, nobody's talking about it. Now, do I think we should be talking about the bull case? No, it's not the most probable outcome here. We know that. But the tails are always fatter than you think. I talk about this a lot. So the extreme positive outcome and the extreme negative outcome are actually more likely than you think on any given year. That's what it means if someone says the tails are always fatter than you think. Okay, we've swung pretty far to the bearish expectation. Maybe it's not going to be as bad as perhaps some people think, or if you're a bear right now, you're thinking that it's going to be much worse than people think. And it really depends what's actually implemented and whatnot. Trump made it pretty clear that his plan was never to nuke the global economy. It was to come to trade deals. So there's still a lot of details of this we don't know. But you could start to paint a picture. You can start to kind of game out what markets could look like from here. I think we have enough clarity for that. But first, again, take a listen to what Tom Lee has to say, and then we will discuss all of this more in depth.
Futures are adding to Friday's somewhat surprising gains. For more on the markets, let's bring in Tom Lee, head of research at Fundstrat and chief investment officer of Fundstrat Capital, as well as a CNBC contributor. Last time you were on, Tom, you said, I think we can, and it was definitely one of your what seemed like outrageous calls at the time. You said, we'd be at 5,500 on the S&P. We should be able to get back there fairly easy. I think we were below 5,000 at the point. We did get close. We got another pullback, but after Friday, we're almost at 5,400 again. What was your reasons for thinking that? I think you just thought that maybe if you see a cat and you keep clapping, it'll jump the first time, but after a while, it finally just ignores you. Is that going to happen with the markets and all this tariff backdrop?
Yes. I mean, I think I know what you're saying, which is I do think markets are getting a little desensitized.
That's what I mean, yeah.
Yeah. And I think part of it is if someone had an investor hat on, not tactical hat, really good opportunities are emerging because the number of stocks below the 200-day moving average was like 15%. Historically, that's a strong buy signal. I mean, you're going to find a lot of bargains there. And the VIX got above 50, and it almost always pays you to buy the stocks when VIX is above 50. But in the near term, it's a roller coaster. I mean, it does feel like we're having a lot of zigs and zags, and even over the weekend. But to me, I think everything that happened over the weekend, including the Sunday further explanations, all of this is still unequivocally positive for stocks.
Interesting. So when we were below 5,000 and you were on the S&P and you were at 7,100, that's like 40%. So you're now, and were you one of the high people on the street at 7,100? Were you there?
Well, our year end originally was 6,600. But we thought we could touch 7,000 mid-year. Okay. I think the 6,600 is still possible, but I do think the 7,100 mid-year is obviously it'd be very difficult to reach. So but it's possible.
6,600 by year end. What about you've made a lot of good calls based on moderating inflation. What did you make those numbers at the end of the week?
Well, I think that if we didn't have to consider tariffs, inflation is definitely tracking below expectations.
I mean, where the Fed wants it, almost. Right?
Yeah. I mean, core inflation month over month at 0.00056. I mean, that's like literally hitting a wall.
Now, is that for good reasons or for bad reasons?
I think it's for the right reasons because,
Oil?
Yeah, well, there's oil and foods off the boil, but it really is shelter is actually cooling to a 2% rate, and that is what you need to get inflation back down to 2.
Do you, at this point, foresee the worst case scenario in terms of dollar declines, 10-year yields due to people the Journal had an interesting piece today that it doesn't need to be that people just abandon the dollar and abandon the United States to invest in. It's just on the margin, because it's a given that you cannot ignore the United States as the elephant in the room globally for all these things, for the currency, investments. But on the margin, it could make a big difference if there was even a slight lessening of what we were used to.
Yeah, I agree. I think that is the narrative at the moment, that U.S. exceptionalism's over and people are selling treasuries and dollars to buy other assets. But I'm not in that camp that it's sustainable, because unless weaker dollar and higher yields suddenly makes the best companies in the world outside the U.S., the best and the most important companies in the world are American companies. They've produced the best shareholder returns. And, if you look at the S&P, 40% of the returns of the S&P come from new companies every 10 years. Is there going to be suddenly the best new company coming out of Europe instead of the U.S. because of the dollar? And I doubt it. And I think U.S. companies are going to adapt.
So again, Tesla stock at the time of recording this video, around $247 per share or so. I think specifically with Tesla, even versus the broader markets, you are pricing in like a lot of bad news for the broader markets, but you're pricing in even more bad news for Tesla. Nobody's looking at what could go right for Tesla. They're only looking at what could go wrong for Tesla. And anytime we've been in that scenario for Tesla, where the bulls are far and few between and the bears are everywhere, it's always been a good time to buy Tesla. Okay. And you've sold off a lot. I do think it is a good time to buy Tesla if you don't have Tesla, or if you're not at a position where, you'd be happy with your position. Let's say if Tesla went back to new all-time highs. If you have $10,000 in Tesla and the stock doubles and goes to new all-time highs and you're not satisfied with that, well, maybe it's time to put a little bit more money to work. Okay. If you're satisfied with $500 in Tesla and it could double, then maybe whatever, your situation's different, you'll be okay with that. Because I think we do need to be prepared for the next couple of weeks to be a very positive event for Tesla. We need to be prepared for Tesla to potentially be in the 300s 3 weeks or 4 weeks from now. Because at this point, I think peak fear from tariffs is over with. Okay. Now, that doesn't mean we couldn't get downside or that there will not be moments of fear. There definitely will be. But I think overall peak fear is past us. As Trump made it clear, they're working out deals. You're going to start getting deals done. Now, ultimately, it depends what the economy looks like and what earnings look like. That's ultimately what's going to actually drive the markets, is fundamentals long term. But short term, it's all about emotions. And I think, again, at this point, you've hit peak emotional fear. And I think that's more or less what Tom Lee was trying to say in the clip you guys just heard. But I'll say it more frankly. You've hit peak emotional fear. Question is, do we actually see the damage in the economy? And that is a big question mark. I think a lot of people are positioned, have been positioning lately for, yes, we're going to get more weakness in the economy. And that is certainly possible. I do think some stocks are better priced for that, like Tesla, down almost 50% from all-time highs, certainly priced for that. Now, what's also interesting, and we talked about this in the last video, when markets are going through this weakness, when there is recession fears, things just get indiscriminately sold. There's no logic, there's no reason behind the selling besides just emotions, right? People go out and sell Tesla even though like Tesla is freaking about to launch the robotaxi network in June. Like, does that make any logical sense? Probably not. Okay, not really. Optimus, I mean, still looks like it's going just fine. And theoretically, if we did want to onshore a lot of the manufacturing jobs that are in China or Vietnam or other countries, let's be honest. You could barely get people to work in McDonald's these days, let alone sew up shoes in a sewing shop, right? Optimus use cases actually grow exponentially in an onshoring kind of boom, right? Manufacturers, they want to hire humans, but humans don't want to do those kind of jobs. Do you really want to sit there at a sewing machine for hours on end and sew up clothes? Probably not. Do you want to sit there and screw on backs of iPhones or screens of iPhones hours and hours and hours every day for the rest of your life? I don't know about you guys, but I don't. All right? That's the long-term bull thesis for Optimus. There's nothing that will change that. I don't care if Tesla stock went to $5. There's nothing that changes that unless there was some kind of crazy laws or something that prevented humanoid robots. So nothing changed with that, Optimus, and that's really the long-term money with Tesla. Nothing changed with the robotaxi network. If anything, we've gotten more clarity in recent weeks that that's coming. Model Y seems to be selling very well, especially in China, what looks like in the US and in important markets. Europe, there's a little bit of political weakness, but Europe doesn't matter too much in the grand scope of things. A little bit of weakness there is not going to move the needle much. And let's be honest, this year is really not about deliveries. It's going to be about profitability, number one, and it's going to be about what's Tesla doing for future growth. Robotaxi, Optimus, and the cheaper, lower-priced Tesla. Now, we have assumed, and we've been told, that production for the cheaper, lower-priced Tesla will be starting before June, or around June, the first half of this year. Well, you're getting close to that moment. You're about 2 months away from the first half of the year turning into the second half of the year, which is kind of a crazy thought. It feels like we just started 2025. Needless to say, that event is coming up shortly. And from, I guess, a vehicle perspective, maybe hopefully a profit margin perspective, that newer, lower priced product should be accretive to Tesla everywhere. Profitability, gross margins, net margins, all of it. So there's distinct catalysts coming with the stock down, call it 50% in 2 months. And what I think is probably peak tariff fear out there, that sets us up for a positive risk environment, I think, for Tesla over the next month or so. I mean, call me crazy, but I think Tesla could be $100 higher in a month from now. Or if the economy does show dramatic weakness, it could be $100 lower in a month from now. I just think the odds of $100 higher is greater, right? I would say the odds that Tesla is $100 higher from here a month from now, it's probably 75% with the upcoming catalyst that we have, like earnings 2 weeks from now. I would say there's probably a 25% chance Tesla is $100 lower, around 150 4 weeks from now. I think Trump would really have to do something crazy to spook the markets at this point to ratchet up fear to those kind of levels. I mean, you already have 145% tariff on China. It's hard to envision that, okay? So for all of these reasons, I think now is a good time to be bullish on Tesla, while also understanding that you probably don't want to be all in at these levels either. It's a balance of risk reward. It's a balance of, not living with regret. I think life as a general philosophy is all about having as little regrets as possible. If that means, changing careers or going after, the girl or having too many kids or whatever. It's about minimizing risk and regret. Okay. To a certain extent, risk, but then again, all great things come with risk in life. So with minimizing regret, if Tesla went to $1,000 tomorrow or 2 years from now or next month or whatever it is, you don't want to be underinvested to the point where you regret it. Okay. Because I think we all can, share in this one principle. Tesla's probably going to, not a guarantee, but probably be dramatically higher than where it is today, 5 to 10 years from now. Like dramatically, probably 10x higher. Tesla is roughly a $700 billion company today. 7 trillion, definitely in the cards 5 to 10 years from now. If not 14 trillion, which would be a 20x from here. I don't think you want to live with that kind of regret. $5,000 invested in Tesla today with a 20x would be $100,000. 50 grand invested in Tesla today would be $1 million. Okay. That is what some people would call life-changing amounts of money. And by then, Tesla probably pays some kind of dividend. And yeah, you might make 30 grand a year on top of it if they pay 3%, just because you bought your shares, right? So just kind of throwing some things out there, things to think about here. We do have some big events this week. Thursday, earnings with TSMC. How's the AI story? Netflix, obviously tech. And I don't think Netflix matters too much, honestly, as an event this week. But it can have a sympathy move with other names, other big tech names. And then you do have Wednesday retail sales. That could be the catalyst to determine whether Q1 GDP is going to be negative or not. And that's why I think it could be a big deal. We'll talk about that a little bit more coming tomorrow, since tomorrow's Tuesday. Retail sales come out on Wednesday. We also have a speech from Fed Jerome Powell at 1:30 today. Now, also in the news today, Fed Waller basically said that, hey, I want to prioritize the economy, not fighting inflation. If it looks like we're going into recession, he wants to cut rates preemptively for that, to protect the economy, not to worry about inflation and then figure out the economy afterwards. And that was also something that did kind of help markets. The first Fed official that actually sounds like they understand what they're doing, in other words. So let me know your thoughts on all of this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.